Name is Luke Robinson, and I am a business advisor here at Collective. And essentially, you can think of Collective as kind of like an all-in-one solution for your self-employed business. We are a complete, like, full-service back office platform, and we're here to form your business. Handle the formation aspect of things if you haven't already. Elect S corp status for you. Handle your payroll, your bookkeeping, provide tax support throughout the year, and at the end of the year, file your S corp tax return. So we pretty much do it all. But today, I am running a session that we like to call Tax Tuesday. And essentially, what it is, we have it every Tuesday. And essentially, what it is, it's an AMA. It's an Ask Me Anything surrounding taxes, surrounding business finances, or just sort of best practices that you can employ to run your business in the best way. And before I say this, let's get the legal stuff out of the way. Is this Consider this session an informational session only. Do not consider this, like official tax advice. Like, I don't know your situation. The things that I'm saying could be wrong. Some of the things I said could be incorrect, just because like the U.S. tax code is extremely complicated. And before you take any official action on any of the stuff that I say, consult with a tax attorney or a CPA. So just keep that in mind. But now that we've got that out of the way, let's go ahead and start on some questions. So the first question, it's a great one. Can I have one LLC with multiple DBAs rolled into it? First of all, yes. Yes, you can. So an LLC, I mean, of course, that's the legal structure for your business. Like, that's the, sort of legal entity that you file with your state of residence. That's where you form the LLC, the Secretary of State's office from wherever state that you live. A DBA is actually, it's called a doing business as name. And essentially what it is, it's just kind of, it's something else that you file with the state, but it can be different from your LLC name. And it allows you to kind of, choose a different name that you can present to the public what your business is called. So for example, like my LLC name might be Luke Robinson is Fantastic LLC, but I might have a DBA name that says, Luke Robinson is Great Operation, something like that. Now, here's the thing about this though, about multiple DBAs. An LLC, like in order to have multiple sort of business operations under one LLC, they need to be materially related. Like they can't just be like separate businesses. So for example, let's say that you've got like a marketing agency or something like that. And, you have one DBA that's called, marketing consulting company. And then you have another DBA that's like, I don't know, like, marketing, social media management DBA. Like all of those things are related to where they could be, under one LLC. But let's say that you were a marketing consultant and you had a like massage therapy practice. Let's just assume that. Those two things would need to be under separate LLCs because the IRS, they have these things called business activity codes. And essentially what it is you're only like for businesses that have like unlike activities, they need to be under different LLCs. If they're not, and the IRS kind of like catches wind of it, then they actually have a right to disallow the business expenses that aren't related to the main business purpose. So it's important to like only group DBAs under one LLC if they're all related somehow. Oh, here's another great question. I'm a solo LLC. Why should I change to an S corp? Well, there's really one main reason why you'd want to make an S corp election. And that's the technical name for it, by the way. An S corp is a tax election. It's not a business entity by itself. So you actually have to have a business entity set up before you can make an S corp election. In other words, you got to have an LLC set up before you can become an S corp. you set up your LLC with the state, and then you make an S corp election with the IRS, which is just sending in paperwork to the IRS. Before you do that, like if you're just even if you're a sole proprietorship or if you've taken the step to become an LLC, a huge chunk of your net income is subject to the self-employment tax. Self-employment tax is a flat tax rate of 15.3%. So let's just assume that we have a small business owner that makes $160,000. Before you became an S corp or before you made that S corp election, how you'd come up with your self-employment tax is you'd take $160,000 and you'd multiply it by 15.3%. All of your money is subject to it. All of your net income is subject to it. So, after you write off business expenses and whatnot, all the money that's left over is subject to the self-employment tax. But let's assume that someone makes an S corp election. And with an S corp election, what happens is essentially kind of like an employee-employer relationship. It's created between you and your own LLC. You become a W-2 employee of your own business. So since that is the case, your business will pay you a wage. It'll pay you a salary, just like you'd receive if you work for someone else as a W-2 employee. So let's just assume, and now the only chunk of your earnings that's subject to the self-employment tax is the salary, is the amount you choose to pay yourself. So for example, let's assume that someone makes, $160,000 in net income. And let's also assume that their salary is around 64,000. I don't know exactly what this hypothetical person's salary would be or your salary. That's just kind of a spitball. So that first 64 grand is still subject to the self-employment tax. You still pay it. But the other, and I'm sorry, I should be able to do this in my head. The other 96,000, that is considered a distribution on your behalf. Like kind of technically speaking, you can think of that chunk of money as dividends. Some people use that term. But long story short, that chunk of money is no longer subject to the self-employment tax at all. So, assuming that someone made that much money, an S corp would save them $14,688 a year in the self-employment tax. So, once a business owner reaches a certain income level, then an S corp election can be quite advantageous to the business owner. All right, we've got some more great questions here, so let's keep chugging along. What is a cost segregation report, and how do I get one? So, a cost segregation report that has to do with really investment properties, like rental property. Well, investment properties more broadly, like commercial or investment properties, and it's used for tax purposes. And essentially, like what a cost segregation report is it's used to identify like components of the property that can be depreciated over shorter periods of time. So, like for example, like by accelerating depreciation, like on certain components like fixtures, finishes, equipment, it it can really reduce the tax liability um, pretty significantly. But to be honest with you, that's a little bit complicated. It's a little bit more complicated for this forum, but generally, that's what cost segregation is. When will you guys start filing business taxes this year for current members? We do file business taxes, actually. Like we file because all of our members are S corps. They're LLCs with S corp elections, and filing the business tax return, the 1120S, is included in the service. If I'm a personality and my business is based on my day in the life content, can I write off my food and living expenses? No. So here's the thing. The IRS has what's called a kind of an exclusivity test. And essentially, the things that you write off for your business, especially things like food and things like that, they have to be exclusively used for business. So, like, even though that you're a personality influencer, like, or whatever you want to call it, you still got to eat to live. Like eating, the act of eating is a personal expense in the IRS's eyes, anyway. This is like, don't come after the messenger here. This is just what this is how the IRS looks at it. So just because like you're filming some of these lifestyle things, the IRS probably would not be okay with you writing off a lot of those expenses. If I buy a car specifically for Uber or Lyft, can I write it off? Yeah, sure you can. Like there are ways to write off actual expenses with the car. There's ways to depreciate the car and everything like that. But you just need to make sure that it's exclusively for Uber and Lyft. If you're using it for sort of personal trips or any personal trips at all, then it wouldn't be exclusively used for business. So you kind of want to probably just write off mileage that has to do with the Lyft or Uber. But if you own a car and you only use it for Uber or Lyft, you can certainly write that off under the business. For a bookkeeping perspective, do you do deferred tax entry for S corp? I'm not really sure what that means. Like, if you're meaning, if you mean like, do we carry forward losses? Sure. Like, if your S corp has a loss one year, theoretically, you can carry forward that loss to the next year. So we would do that. But I'm not really sure what you mean by deferred tax entry. Should you put should you put rental properties in an S corp? That's a very good question. Generally, no. You should not put rental properties in an S corp, and this is the reason why. It's essentially what it is. The reason why is because the entire reason why you'd want to do an S corp election is to save on the self employment tax. That's the entire reason. Passive investments like rental properties, stocks, bonds, just other sort of financial investments like that are not subject to the self-employment tax at all. So like there's no sort of like taxes to save on when they're not subject to that tax rate. So you wouldn't. Now it's possible to put rental properties under an S corp, but essentially all you need usually for rental properties is an LLC. You don't need an S corp election, because if you make an S corp election, like really all you're doing is making your tax situation more complicated and for no benefit. Is buying a car or leasing a car under your LLC better? Well, that really kind of depends. Like it's there's not really a better method. It's just like better. It's whatever is more useful to you. Um, Now, here's what I would say. I'd be very careful with actually buying a vehicle under an LLC, or excuse me, or even like leasing a vehicle like in the LLC's name. Like I'd be careful with that because usually like when an LLC or when a business when it buys a car or it leases a car, that car needs to be used exclusively for that business. And just a vast majority of the time, people kind of have shared sort of situations with their cars. So it's not only just for not only typically it's not only just for business. It's used for personal and business. So um, uh, that's just how it works there with the cars. All right. Are attorneys taxed a little differently when it's in an S corp? Is QBI reduced? As far as I know, no, attorneys aren't. And again, like I'm not an attorney and I've never heard that before, so I could be wrong on this. But as far as I know, no. I mean, attorneys aren't taxed any differently under an S corp than anybody else. Of course, look into that. Like, it'd probably be a good idea to speak to a tax attorney or something. But I've never really heard of that before. I think that an attorney, a self-employed attorney, would be taxed just like any other self-employed consultant or anyone like that. So no, I wouldn't think that. Now, the QBI deduction is yes, there are situations to where that can be reduced with an S corp, and that's a little bit of a complicated situation. It's going to be hard for me to go into it in this forum, but essentially, yes. Like to answer your question, in certain situations it can be, and the QBI is it's a qualified business income deduction, essentially what it is, and in certain situations that can be reduced by going with an S corp election. So, sometimes it's a good idea to, have an accountant or someone, kind of run an analysis to where to figure out what makes sense. And if I'm understanding it correctly, the QBI deduction actually might be ending. This might be the last year for the QBI deduction. With the 2017 tax law, it's sort of set to expire this year. So in 2025, the QBI deduction might not even really be a thing anymore. Should I hire my children in my business? Well, that's a complicated question because a lot of people think that you're allowed to just like, put your kids on the payroll just because, like, just to take advantage of the tax implications or something like that. But you're really only allowed to put your children on the payroll if they're actually working in the business. Like if they're not working in the business, then that's not really legal. Like you can't put your kids on the payroll just to pay them and like just to take advantage of the tax situations. And but I mean, if your children are working in the business, like actually working, you can prove it. Like you have timesheets for them. You can prove on what sort of job duties they're doing periodically for the business. Then sure, like it's theoretically possible to employ your children. But also, there's certain questions you need to ask yourself with these types of decisions. Is even though I can do it, should I do it? Should I be putting my kids under my business? Because the thing is that there are a lot of things with the IRS that are like theoretically possible. So you but you need to ask yourself, is it worth it? Because things like employing your children, putting your car under your business or your LLC, those things just make it a little bit more risky, and like the IRS looks at you a little closer when you do those sorts of things. So you have to ask yourself, is it worth the audit risk for me to do some of these things? I started on my Etsy store with my sister last year, and we made 265,000 in revenue and didn't pay quarterly taxes. Should I get a CPA or have a place like H&R Block work with me on my taxes? You should definitely get help with the taxes because the problem is if you and I'm guessing that 265,000 in revenue, that's total income. But there's probably, quite a bit of expenses that you could write off from that income. So you won't be taxed on that whole 265 if I'm correct. But yes, I would certainly work with a tax professional on that because if you just kind of let it sit and you don't pay any taxes, you're probably looking at a pretty hefty tax bill. So I wouldn't go with H&R Block. I would go with someone like a CPA that they could go through and handle that for you. Do you advise your clients to check with state labor laws? Do you look at both federal and state? We certainly advise our clients to check with the state sort of compliance issues. Sure, and there's even certain situations to where certain professionals in certain states they don't need LLCs. They need something like a PLLC. It's called like a professional limited liability company. Or they'll need sometimes certain licensed professionals need like a professional corporation, and we don't advise on that kind of stuff. So that's just something that the client would need to like check with the state on, or check with a professional on. But we're mainly looking at the federal side of things. Like Collective is an S corp company, so we handle the federal side of things. We're not even we're not even filing like the state return or your personal return. So if you're a licensed professional or anything like that, it's a good idea to get sort of specialized advice on what you should do with your business entity. How long does it take for the IRS to approve S corp elections? Great question, Sydney. Unfortunately, it could take months. It just kind of depends on how backed up they are. In years past, it's taken like up to a year for them to approve an S corp election. But honestly, like once you make once you make the S corp election, you can go ahead and start acting as if you're already an S corp. You can start running payroll. You can start running, S corp specific accounting. Um, you can start like you can put like on W-9 forms. You can mark that you are an S corp. So you can go ahead and like start acting like you're an S corp as soon as you send in the paperwork. But yes, like now, I want to say it's taken them a few months to approve an S corp election. So it's still quite a chunk of time, unfortunately. And it's a good idea. Like because what'll happen is when you do get approved for the S corp status, you you will get a letter from the IRS. Like it's essentially an S corp approval letter. So and it's a good idea to kind of file that away and keep it in a safe spot. Okay. Do you typically file the 1120S without getting that approval letter, or file the 1120S with the filing? We typically file the 1120S, like for example, let's say that we're on the like later half of the year, and we go in and we send in a form 2553, which is the S corp election form. Even if we haven't got that approval letter yet, is typically, yeah, we'd go ahead and file that 1120S because you're acting like you are an S corp. There are some people, just to be safe, like sometimes they'll put in a an extension for the S corp tax return, the 1120S. So that's so they can wait to see before they get the S corp election. Um, but typically, you can go ahead and file the 1120S. Why do you say months? Well, I say months because it's the IRS. Unfortunately, like they're slow with stuff, and like they're just backed up, and it just takes them a long time to approve the S corp election. But if you do the form right and if everything looks right, then typically it is approved. But things do happen. Sometimes when the form is filed incorrectly, or there's just other implications that you have to wait for an S corp. Sometimes the IRS comes back and says, "Okay, well, we're not going to approve you for the S corp election this year, but we'll approve you on like the first of next year or something like that." So it just depends on the situation. Election election means something different than formation. Yes, that's a good question. So yes. So first off, you would form the LLC first, or a corporation, and then you'd make the S corp election with the IRS. That's the paperwork you send in with the feds. So yes, if I pay my quarterly taxes correctly, do I get penalized? No, no. I mean, if you pay your quarterly taxes correctly, that's how you don't get penalized. But if you don't pay your quarterlies, like if you kind of wait till the end of the year, then yes, you could get penalized. It's usually not, just terrible. It's usually not a huge penalty, but why pay, more money to the government than you have to? So it's just a good idea to pay your quarterly taxes. All right. Okay. What about a multi-member LLC in a corp, in an S corp, and one leaves? How do I file that return? Well, probably what you'd want to do is first, like if someone leaves the LLC, then it'd be a good idea to kind of amend your articles of organization, or like amend the formation documents with the state of residence, like wherever you formed the multi-member LLC, and you can take someone off by kind of filing a a form, or like a form with the state. So just keep that in mind. This is going to be my first year paying LLC taxes in my account, and my accounting told me I need to pay them by April. I asked if I can pay them in payments, and she said I'll get penalized. Well, yeah, like if you so essentially what'll happen is that like you owe your taxes by April 15th. Like you owe them by the filing deadline, which that's the filing deadline. Like that's the filing deadline for your personal return. So if you don't pay them by that deadline, like yes, you can go on a payment plan, but payment plans, like penalties and interest, continue to accrue even if you're on a payment plan. So yeah, you'll still get penalized if you set up set up a payment plan with the IRS. But you'll get penalized less if you file your if you do owe taxes. Just make sure to file your taxes by the deadline, because you get penalized more. Like let's say that you owe a tax balance for a certain year and you don't file your tax return by the due date, then yes, you get penalized more. So, it's just, even if you owe taxes, it's important to just file your return anyway and then get on a payment plan with the IRS. What can I do? Oh, here's another good question, Sydney. What about what about in a partnership and one partner leaves? Does that turn into a Schedule C? Yes, I would think so. Yeah, that's a great question. So yes, I mean, if you like, what you would want to do is you'd probably want to do two things. First off, you'd want to file paperwork to the state, like to take your partner off and become a single member LLC. So, but also probably what you want to do is file an entity classification form with the IRS too, because the IRS, they'll still probably consider you a partnership. That's a great question, Sydney. Even if you take someone off with the state, like even if you take someone off with the LLC, I don't really think the IRS would know, and they would still consider you a partnership, and they would still like kind of they would still require a partnership return, a 1065 return. So you'd probably need to file some entity reclassification forms with the IRS to, I guess, to now consider yourself like a disregarded entity, or a single member sort of LLC with the IRS, which would then turn into a Schedule C. You're very welcome, Gabriella. Thanks so much for showing up. Oh, thank you, Marissa. Marissa comments, you have to report an ownership change on the tax return. So, like, if you're filing 1120S or you're filing a tax return, if, any sort of ownership changes happens, you need to report that on the return. Thank you so much, Marissa. Have you heard of an ecclesiastical trust? No, I haven't. Sorry about that. But I'm sorry, I'm going to have to jump. I actually have another call with a prospective collective member. But thanks everyone so much for showing up to the session here today. I really appreciate it, and I'll be here next week for another Tax Tuesday.